Yes,
Hmm.
I would say the investment loans is kind of like a big category,
Mm,
debt service coverage ratio. So
right.
it will like a usually the golden rule is a one like a 1.0 because if you usually it has 30 years,
Okay.
but it also there might be have some like 40 years
Oh,
term.
okay.
And also, there might be another feature that can be leveraged for the investor is the interest only.
I
So,
think.
yeah.
Yeah. Sorry.
No, no, no.
Uh,
Yeah.
yeah, I was about to ask about the investor loan that you were mentioning earlier. So, in a scenario, let's say, I always use this scenario because it's very typical for Indonesian when they're coming here. Because the most reason is because the kids coming here for school, right? Now, parents were thinking, oh, maybe we can just purchase a house. So our kids, instead of renting, to a rental properties, they can just stay in our home, or maybe we can rent the house once they're finished or while they're studying here. So will that kind of scenario fit into this investor loan?
Yes.
Hmm.
I would say the investment loans is kind of like a big category. It can fit many kind of investment needs. Some of the investor they want to like a flip house, so they just use the loans to get it and then maybe remodel it and sell it quickly. Some will like a buy and hold, okay, waiting for the asset appreciation, and some will like just like park the house for themselves. Technically, it might be considered a second home, but because of their maybe their identity, they are foreigners, they wouldn't be able to qualify for a second home. So
Hmm.
they will use these investment loans to buy the property.
Okay.
The DSCR loan is one of the investment programs I want to
Okay.
highlight here. It's simple, it's easy, but it's not the only way. Okay, if you can qualify for conventional approach, I still recommend you do that because
Hmm.
you will enjoy a good rate, a good budget with that. If not, then the DSCR loan usually is your best chance to get a loan if you don't have income.
Mm.
Yeah.
Okay. Yeah. Yeah, I think that's pretty good. Maybe.
Oh, I want to share what how to qualify for a DSCR loan. That
Yes, that was my
and
question earlier.
yeah, that I think because
Uh-huh.
you might want to know that because it's not that as simple as
Yes.
it sounds.
Okay.
Yeah. Second, I'll
Yeah.
share.
Maybe. Hmm.
Let me share the other slide I have.
Hmm.
Okay, can you see it?
Uh. Okay. Yeah.
Yeah. So this is how the DSCR ratio is calculated. Um, when we talk about the DSCR loan, actually it doesn't really look at the borrower's credit profile. It only focus on the property, the property and how much rental it can generate it. So what the lender would do is to check the monthly payment, like in the debt to income ratios, the same thing. Check those like a mortgage payment, homeowner insurance, property tax, associated dues, all these sum up, and then check the rental. What is the expected rental from this property? Uh,
Hmm.
for example, if your monthly mortgage all the total payment will be 5,000 and your rental is 5,000,
Mm.
and then you divided your rental income divided by the housing liability.
Hmm.
and you get this ratio called the DSCR ratio,
Mm.
that service coverage ratio. So
Right.
it will like a usually the golden rule is a one like a 1.0 because if you have beyond the 1.0, that means you have the rental income that can cover all the payments that you need to pay for this property. So it's a positive cash flow from the rental, and
Okay.
that will be considered like for most of the programs that's
Hmm.
eligible. If it's below
Okay.
one, it still has programs to be eligible, but I would say maybe half of the programs that will still be eligible.
I see.
Yeah,
Now, how about the rate? Because this is investor loan. So usually with personal loans, investor loans are kind of bit higher, right?
higher,
So
yeah.
what's the difference? What's the
Uh,
delta between them?
I would say it depends.
Okay.
Still, like the market is if the market is trending down, all the loan rates will trend down. Typically, the investment loan or the DSCR loan specifically will be maybe half a point higher
Mm.
than
Okay.
the conventional loans.
Right.
But there's also other features that we can add to lower the rate.
Okay.
One of the key feature that I always like to introduce to my borrowers is the prepayment penalty. So
Mm.
for investment loans, it's allowed to have prepayment penalty on the loan, which means in certain period of time, you cannot pay down or pay off the loan
Mm.
with X amount. So it's a quite flexible terms. Different programs have different terms, but
Okay.
in general, like if you have a 30-year fixed rate, and then if you say, okay, I'm not going to pay down or pay off the loan in 5 years, then your rate will be much lower. If
I see.
you say I want to have like I won't pay down or pay off in 2 years, your rate will be like in between. So
Okay.
it's kind of like a tiered rate
Hmm.
depending on how basically how strong your commitment is to the loan. So that's
Okay.
that's how it's structured. So a lot of buyers they actually prefer this structure because they
Okay.
are thinking if it's positive cash flow, they can keep it for a while, and as long as the rate is lower, so they
Okay.
can have the cash flow.
I see. And does this in the SCR or slash investor loan also has the same structure like 30-year fix with like the personal loan, or it has a different setup for the term?
Usually it has 30 years,
Okay.
but also there might be have some like 40 years
Oh,
term.
okay.
And also, there might be another feature that can be leveraged for the investor is the interest only. So
Mm, okay.
for the same like 30 year, if you only pay the interest in the period, and then basically the term is after 10 years you pay off the loan, and that's called an interest only DSCR loan. So in that sense, you can imagine that the rate might be slightly higher than the conventional
Mm,
DSCR, but
right.
in terms of the cash flow, it will save a lot for the investor.
Mm,
So
okay.
if you are just looking at the positive cash flow, interest only is a great feature to consider.
Okay. Great. Well,
Yeah.
thank you. Yeah, I mean that's good that today we have several, discussion with this kind of
Yeah, I
numbers,
want to
rates.
bring
Mhm.
more option to my clients.
That's good.
Yeah,
Hmm.
so they are fully aware what is their
Yeah,
goals and what is their options.
yeah. I think that's pretty good, Shaki, because for those viewers, for this video, maybe they already have their first house here. now they consider to have, oh, why don't we have like a rental property here, right? Now they can come with, okay, I think I'm eligible for investor loan. So might as well just call Shocky here to help us to see, if we qualified or not.
Exactly. Yeah.
Yeah.
Happy
Uh-huh.
to meet your clients or have a discussion with them.
Yeah.
I'm 24 hour, so I'm
That's a
always
good thing.
available and always a resource for you.
Yeah, that's a good thing. Yeah, maybe just for those who's seeing this video, Shaki actually a very close friend of mine. So we always communicate beyond the office hours, for a client's best, right, Shaki? So
Yeah, we are
always
one team, one
trying
team.
to, yeah, one team, which is very important. Especially we're talking about the .com lender, big banks, right? This sometimes people might see, oh, they offer like good rates and this and there, but the thing is, have you seen the lender? Have you seen this person behind the computer checking your financial information, right? Are they really a real person, or this is AI generated? Right, especially right now. So yeah, that's what brings me to actually our next discussion, Ashoki. How to make a great team, out of this buying house process thingy.
Yes,
Yeah.
yes.
So,
That's actually some. I think most of the borrowers or clients, they are not aware how complicated a home buying process is, and how a mortgage process is. So usually, when before the purchase, like a lot of buyers, they understand and they want to know their like a budget, right?
mhm,
Their loan capacity.
mhm,
So a good lender is who can help them to spot the potential red flags early on, offer some workarounds or tailored solutions, and give them like a very detailed analysis on their financials.
mm,
Right? The pre-approval is just one of the product that the lender will have before the purchase,
right.
and then you form this like a very close like a war unit, like
Mm,
a borrower, the client,
mhm,
the realtor, and the lender. You are one team, okay?
mhm,
And before and after the mutual contract, this is a teamwork. In those like competitive times, the seller will likely to receive multiple offers,
right.
and how the realtor and how the lender can help you to get the house is your first priority. It's not the
Right.
rate. It's your first priority to get a house. In the home industry, we have this saying like you marry the house and date the rates, because you can if you have a really a good deal for the
Mhm,
house, it can save you tons of money. It's not
right.
just your rate. Rate, if you do the math, it will save you some money when it's high or low. But compare with the like the seller credits you can get, the price you can negotiate. The rate like a saving is a very minimal, okay, and
Right.
plus you can always refi,
Right.
especially for primary. You always can refi, so there's no string to the loan that you made. You
Mhm,
can refi multiple times over the years, and I'll give you a simple fact is in the past, I think 5 years, average homeowner, they have refined twice.
mhm,
So you can see kind of like it's the rate will affect you in the short term, but in the long run, you always go with the market, right? The market, the rates will go down, so your rates will go down as well.
right.
Okay, so in the back to the how the lender and the realtor like a team up to
Mhm,
help you get the house. One thing I always do is to ask the realtor whether you want to what price tag you want to put on your pre-approval. Sometimes you want to show you have a very strong financial capacity. Sometimes you want to show, okay, I can just hit the price tag I want to make the offer, not the full listing price, right? So it's a dynamic, and it's always a very kind of like a intensive like a period for the lender, for the buyer, and for the realtor, where we have to like work around the clock to like make adjustment, make the negotiation work. So that's before the contract. And after contract, now the lender will start to bring his own team. Okay, there's a bunch of team like processors, appraisers, those like title escrow, everyone like work around the clock to make sure the loan can be closed in time. And for like to my clients, I always like deliver earlier than the closing time. So that's the value that the lender will bring in. And after closing, so many lenders say, okay, the deal is closed. Bye bye. See you next time. But I think a good lender will help you to track the rates on the market, and they must have this system to help you to identify. Okay, now we have maybe some program in promotion that can help you to lower your current rate by X amount. And also they will always look at your financial health. If you have like a change of job, or you want to make a next purchase, a good lender is always there for you to be a good consultant for you. So I would say before the purchase, like in the contract and the post closing, these are all three very important stage the lender can add value to the borrower, to the buyers.
Yeah, awesome. Wow, thank you, Shoki. It's been, I think we spent like I don't know how long already. So I think that's all for me. Do you have anything else that you want to share for the last last thing?
I can share one more thing about I think even I don't want to like emphasize too much on the rates, but still, this rate is still kind of like a pivotal element in the mortgage. So I want to share what my take on the rate. Okay.
Great. Please. Yes.
Just give me a second. Okay. So I think it's just like a quick snapshot of where the rates are and where the rate we'll look at. So historically, if you like increase the time horizon, the rate actually on average in US was above 7%. That's quite shocking to almost everyone that sees this chart. So a lot of people think about the 2%, 3% in the
past
period as a normal stage. But if you look at this chart, it's not. The mortgage rate in US has been pretty high in the past decades. And until I would say the great financial crisis in 2008, it comes down because the monetary policy becomes printing money, basically. So then it goes down and keep it so long. And now everyone knows it's suddenly within a year or two after the pandemic, it kicks back, it rockets up again. And today, I would say it's much lower than 7%. I'll show you the next slide. It's kind of like close to maybe 6% in terms of 30-year fix ARM is called the flexible rate product. It usually fixed for certain years, like 5 years or 7 years, and then it will float by
Mm,
on the market. So the ARM will be lower. Some will be like a 5 or 5.5, that kind of range. But
mhm,
when you look at this chart, you see that the mortgage is slowly but steadily they're coming
mm.
down this year. This is the mortgage rate uh, year to date. Okay, so
Wow. Yep.
this is a coming down. So it's good news. Okay, within
Right.
all this like chaotic news on the market, everything, the rates are still like coming down. It's just not like as quickly as people used to expect. If you ask me last year at the same time, I would say this year might we can easily see 5%. But because of a lot of like nuances or black swan effects, it's still like keeping down, but
Yeah.
it's not that as quickly as possible. Then what is the future? Future is like a crystal ball, and no one really knows what happened, especially with the today's like all these geopolitical news and the macro news. But
Mm,
I would say the Fed usually will set up their trends, their projections. It's called the Fed dot plot. It's released bi-quarterly. So whenever they release that, we'll look at the charts and to see what their projection is for the next 2 years.
mm,
So far, you can see each dot in the chart is kind of like a one member. They vote. Okay, what is the future Fed rate will look like? Uh, in general, it will kind of like going down, and it will stabilize basically from next year around like a 3 to 3.5%.
mm, mhm.
That's the middle ground.
Right.
The mortgage may not tag along that quickly with the Fed rate cuts, but I think eventually it will synchronize. Okay.
Mm, mhm.
Uh, in my takeaway is it's not going to be a slow dance. Next year might be has some roller coaster, kind of like if the projection is lower, then the rate will go down quickly. But if there's another news that flip the side, then it will short back on. So it's going to be like a little bit like a roller coaster. Uh,
Mm,
so I won't put a definite rate target for next year, but my suggestion is to whenever you buy the home or you want to do a refi, you can like pick the rate at the time, and whenever there's an like a quarter or half point drop in the rate, do the refi. Okay,
mm,
no cost refi, which I only offer no cost refi. I don't want to offer
mm.
a refi with cost. Do a
Right.
no cost refi, and then seize the moment when there's another like tier lower, you can lock again. So it's just like a flow with the time, but steadily drop the rate
Mm,
as it goes. So that's a pretty good game plan
right.
for most of the clients.
Mhm.
So I would say even we don't know where the future ends. Uh, I'm still helping here. I want to
Yep.
like give you all these tools and programs that clients can benefit from them.
Right. Awesome.
Yeah.
Well, I guess thank you very much, Shoki, for share all of this. I really appreciate it.
Yeah, this is
Yeah.
a you can post my name cards on
Sure.
the
Yep.
on your video,
No
and
problem. Yeah.
you
Mhm.
can people can reach out to
Yeah.
me whenever they need.
Definitely. Yeah. And yeah, also if they, want to reach out to me first to be connected with Shoki, they're also open. I'm also open for that. Yeah, I think that's all for today. And again, I want to thank you, Shoki, for your time. And I hope
Thank
we
you, Roland.
can, yeah, we can do this again for the next, topic, which is maybe, the, I don't know if there is another good topic that we can discuss, but definitely you'll be up there next.
Thank you so much.
Yeah.
Thanks for inviting.
Yeah. Okay. Thank you, Shaki. And yeah, thank you for watching, everybody. And bye bye now.
Bye.